Hello, hope you are doing good. This is Abdul Rafa, your instructor. So, as we have already finished, we were doing from the Edexcel past papers. We were doing January 2023 paper. Okay, let's write it down as well. So, sir, this is January 2023. And paper two, we have already done. Paper one, we were doing of January, in which we have already done the MCQs, sir. The MCQs part was done. And question number 1 till 10 were the MCQs. Then 11 to 15 were some other parts, small parts that we have to do for 5 marks. Question number 14 we did was on sales ledger control account receivables, right? You can hear me right falling. So now we have to move forward and complete this paper. That is part two here with starting with question number 15. Okay, understood? Getting that
Yeah.
clear? No problems, right? So here we go. It's not difficult, it's not tricky. Question number 15 talks about, sir, complete the corrected trial balance. Okay. So we have to complete the corrected trial balance and must be that some of the information might be recorded at wrong side. Okay. So something that is on a debit side and an asset is to be recorded on debit side must have been recorded on the credit side. So these type of mistakes must have been coming and we have to get them correct. Okay, understood? Got it clear? So we have to complete the trial balance. We have to complete the corrected trial balance here. Okay, understood? Got it? So here we go,
Yeah.
sir. So bank overdraft, first thing is bank overdraft, sir. Bank overdraft is a liability, understanding that bank overdraft is a liability. So liability always comes on the credit side. Okay, students. So sir, liability will always come on the credit side. So it will be 4,250. That will be the liability on the credit side. It's written correctly. Carriage inwards is an expense, sir. Okay, it is part of the income statement or it is part of the purchases expense. That is why, sir, debit will be 480. Carriage inwards should be debit by 480. Understood? Then discount allowed is an expense given to customers to make early payment. Discount is being allowed by us, sir. So discount allowed is an expense and expense are always recorded on the debit side, right? Getting it clear?
Yeah.
Understanding? Any questions on this? The next thing is, sir, the drawings. The drawings, everyone must know that drawings is the contra to capital. Okay, so sir, drawings are contra to capital, and because capital is always recorded on the credit side, so drawings are basically contra to them, so they will be recorded on the debit side. Okay, so this is the one wrong as well. Okay, understanding? So
Yeah.
8300 will come on the debit side. Got this clear? No problem, right? No
Yeah.
issues. Then equity is basically your capital. So equity will always come on the debit credit side. Okay. Equity is basically your capital. So capital as always comes on the credit side. Okay. Understood. Then the word itself says general expenses. We already know expenses are debit nature. So we'll get 10 marks for correcting this trial balance. Okay. Understanding. Always
Yeah.
remember, sir, not difficult, not tricky. That's our opening inventory at 1st October 2021 we have. It is basically 7,200 on credit. We need to remember, sir, that inventory is always an asset. It's a current asset, and asset nature is on the debit side, sir. So you need to make sure that you change it from credit side, will place it on the debit side.
Is closing
7,200 will be
inventory
debit. Can you repeat?
is closing inventory debit or credit?
The thing is that the closing inventory doesn't come in the trial balance because closing inventory, a very good question it is. The closing inventory will never come in the trial balance. The reason is basically, although closing inventory is the asset, okay, what we need to understand that closing inventory basically comes after the adjustments, after the end of there, we try to calculate the value for it. So closing inventory is not available when we are making the trial balance, okay? Understanding? Clear with me, following?
Yeah.
Then again, sir, irrecoverable debts. We should know, sir, irrecoverable debts is what? Make sure you must know the nature, and that is enough. So, irrecoverable debts, sir, is an expense. Okay, right? So, sir,
Yeah.
irrecoverable debts is an expense. So, that is why we'll have to put it on the debit side, sir. So, it will be 390 debit for the irrecoverable debts. You have given loan to employee. Okay, so a loan to employee is given. A loan to the employee is given. So, it means it's a what is it? Loan to employee, a loan because you have given the loan to employee. Make sure, follow very carefully, it's an asset for you. Okay, because the employee will pay you. Okay, let's say you are
Oh.
making this trial balance. Students need to understand that you have to imagine that let's that you are making this trial balance. Because you are making the trial balance, if you are giving a loan to anyone, it means it's an asset for you, are going to receive it. So that is why it is correct posting there. It is correctly already posted 100 on the debit side. Okay. Then we already
Okay.
clearly know that motor vehicles at cost, motor vehicle is an asset, sir. So motor vehicle is an asset, will always be on the debit side. Depreciation is contra to it. So it's on the credit nature. Depreciation will be coming on the credit side. Understood? Getting it
Yeah.
clear? Not
Yeah.
difficult. Premises is 44,000. Again, sir, premises is an asset, and assets are always on the debit side. Understood?
Yeah.
Purchase are also on the debit side because they are part of the inventory first, and then whatever you have made the purchases becomes an expense as well, asset and expense together. That is important thing. Okay, what about rent receive? So, sir, rent receive is an income, right? Rent
Yeah.
receive is an income.
Credit.
Income always comes on the credit side. Okay, so rent receive an income, it will come on the credit side. What about return inwards? This is, sir, contra to the sales. Okay, so what is sales, sir? Sales is the revenue. Revenue
Credit.
comes on credit. I'll repeat, sir. Sales is revenue. Revenue comes on credit. So it's sales return or return inwards. That should have come on the debit side. Okay, so this one is wrong posting. This one is wrong posting. Revenue, simple word of revenue will always come on the credit side. Trade payables is a liability, will always come on the, so this is a liability, come on the credit side. Okay, and trade payables is an asset, will come on the debit side. Okay, very simple and clear. Okay, understood? That's how you will get 10 marks. Let's quickly add them up to get the value. Okay, understood? Hello.
Yeah.
So if we add up the credit side, 4,250 plus 17,800 plus 13,380 plus 480 plus 24,800, 8,420. So I am getting that as 169,130. Okay, understood? So I am getting
Yeah.
that as 169,130, and the other one I have 480 plus 370 plus 8,300 plus 14,350, 7,200, 390, 100, and you got that as 22,300, 44,000, and 64,380 plus 550 plus 6,710. So we got that balance of figure here, 169,130. It's matching, and you will get
Yeah.
complete marks. Okay, understood? Got that, Claire? Following.
Yes. Yeah.
So this is how you will get the 10 marks. By balancing it off as well, you can quick take a screenshot. This is question number 15. We are continuing the part. Okay.
Yeah. Yeah. That's.
Clear on this? Next, we move forward. We have for 2 marks to explain what is indicated if both totals of our trial balance are the same. Okay. So we have to basically explain what is indicated if both totals of a trial balance are the same. If both totals of the trial balance are same, what is indicated? It basically means that the debit and the credit side are the same, which means it shows the arithmetical accuracy of the books of accounts, okay, of our ledgers. Okay, so you can write down if both totals of the if both totals of a trial balance agrees, if both totals of a trial balance if both totals of trial balances if both totals of a trial balances are same if both totals of the trial balance are same, it indicates that there are no errors. Okay, it indicates the arithmetical accuracy. It indicates the arithmetical accuracy of the books of accounts. It indicates the arithmetical accuracy of books of accounts and ledgers. Arithmetical accuracy of books of accounts and ledgers. Okay, of books of accounts and the ledgers. Understanding?
Yes, sir.
And ensures that and it indicates that the arithmetical access books and account ledger are correct. It indicates of them. Also, it indicates about that there are no errors. It indicates that there are no errors because of the trial balance. Okay, there are no errors in this. Okay, it indicates that
Yeah.
there are no errors as well. Okay, indicates that there are no errors, that there are no errors as well. Okay, understood? Getting it clear with me, following?
Yeah.
Okay. Next, we have to mention that you have to state one difference between an error of commission and error of principal. So we can say we got it, that we have got the question of errors and suspense accounts theory explanation. We have to state one difference between an error of commission and an error of principal. That what we have to do. Okay, one difference between error of commission and error of principal. So it is basically, are you guys following with me, getting it? So error of
Yes,
commission,
sir.
error of principal. So what you have to understand is basically, we can write it down that error of commission is basically when or error of principal when wrong, error of principal is when wrong head of account is used. Okay, error of principal is when
What is head of account?
wrong head of account. I'll explain it me. Okay,
Yeah.
is the wrong class of account. Okay, you can say that error of principal is basically, getting it, you can say that error of principal is basically when the transaction is entered in the wrong class of account. Basically means that asset recorded in the expense, okay, liability
Oh,
recorded in the revenue, or capital
oh,
was there, you did it in revenue. So error of principal is when wrong class of account, when wrong class of account is used, when wrong
oh,
class of account is used. Example, asset treated as, example, asset treated, getting it, asset treated as an expense, asset treated as an expense. Okay, understood, got that?
is there one wrong class of account or two of them?
It's, didn't get your question, can you repeat?
Oh, like when you're making the journal entry in error of principal, is there
Yeah,
one wrong class of account or there is two wrong classes of
no,
account?
it's only one account. That basically what happens is, like, you bought an asset, but you didn't record as an asset, you recorded as an expense. Okay, so you didn't
Okay,
recorded the asset as an asset in your books, you recorded as an expense. So that's the thing. Okay, clear, getting
okay,
it?
yeah,
Okay, just give me 1 minute.
sure.
So error of principal is when wrong class of account is used. Example, asset treated as an expense. While we can write down while error of commission is basically what? While error of commission is basically while error of commission is basically the wrong head of account. Okay, we can say that it's the same class. It's the while error of commission is done in the same class, is done in the same class, is
Mm,
done in the same class. Example, same class. For example, payment to payment to Sam, payment to Sam, you have to make payment to Sam was instead made, payment to Sam was instead made to Ram. Okay, getting it, following?
okay,
Or
yeah,
let's say uh, Dam. Okay, so to the person D. Okay, getting it, or Sham, made to Sham. Okay, that's better. Two
okay,
different names of the person. Okay, both of them are data, both of them are suppliers. We have to make payment to Sham, but we made instead the payment to the other person with the
okay,
same different name. Okay, so it's done in the same class. Okay, basically it's done
okay,
in the asset only, it's done in the expense only, you recorded some different expense. Okay, getting it?
okay,
Or you can write it
yeah,
better, payment of wages, payment of wages was instead made to the rent account. Getting it? Payment of wages was made to the rent account. So that is how it goes. Okay, a different, and there was something expense was of wages, but you recorded the expense in rent account. Getting it? That's the thing.
okay,
Okay, clear
yeah,
on that, following?
yeah.
Sure, got it? Any problem? Got it? Then you have
No,
state one, yeah, go on, I'm listening.
no, sir.
State one other type of error. that does not affect the balancing of the trial balance. It's very simple. One of the errors, you have to name them. So what is the number of errors that, what are the other types of errors that will not affect the balancing? Errors that do not affect the balance sheet are, what two of them are
Error
written?
of
Error of
original
commission, error of
entry.
principal. Exactly. You can write it down. Which one you said? Sorry. Can you repeat?
Error of original entry.
Yeah, you can write down error of omission. Error of omission will also work here. Okay. So error of omission will give you that 1 mark. Or you can also write down error of complete reversal, error of complete reversal error, or we can also write down error of original entry as well. Error of, so these are, just have to give one, okay? Make sure don't give all three of them. Just give any one of them, okay? Understood? Omission, complete reversal, error of original entry, and compensating errors, transposition errors, okay? A lot of names are there. You can just pick any of them, okay? Understood?
Yeah.
Clear? So this question number 15 is also done. We have covered question number 16. Understood? Got that clear?
Yeah.
Then we move forward. So we can write it down. 15 was about trial balance. Okay, sir. Getting it? Question number 15 was
Yeah.
about trial balance. And question number 16 will be about, question number 16 is about petty cash book. Okay. So question number 16 talks about petty cash book. Okay. Understood? Got that clear? With me following?
Yes.
Question number 16 talks about the petty cash book. So that is what we have to do. Basically, we have state two benefits. So we are going to talk about the two benefits of maintaining a petty cash book. Okay, so we have to maintain two benefits of state two benefits of maintaining state two benefits of maintaining a petty cash book. Okay, getting it, guys, with me following?
Yeah.
State two benefits of maintaining a petty cash book. That is for 2 marks. Okay, clear on that? Sure. So what are the benefits of maintaining petty cash book?
Uh, to records.
Go on, I'm listening.
Helps to record small transactions, train new employees.
Go on, state two benefits of maintaining a petty cash book. What we can write here, students. So the two benefits of maintaining the petty cash book is basically, it will save the time and effort of the main cashier, okay? Because you're maintaining a small petty cash book, okay? So you can write it down that
Yeah.
it basically saves the time. Getting it? It's basically saves time and effort. It basically saves time and effort of the chief. It basically saves time and effort of the chief cashier, okay, or the main cashier of the cash book, right? So it saves the
Yeah.
time and effort of the chief cashier. And second, it provides the training for the junior cashier as well, okay? It provides training for junior cashier, okay? So maintaining small thing to provides training for junior cashier. You can write this point as well. Understanding? Getting it? Following? Then you can say that it is also, let's write down, although I've just written two of them, but you can write down the third one as well by saying that it will reduce, it will reduce so that there will be less entries, okay? There will be less entries in the main cash book, okay? There will be less entries in the main cash book, okay? There will be less entries in the cash book, okay? In main cash book, okay? Understood? Got that clear? Following? There will be less entries in the main cash book. Understood that? Got it? Sure. Any problem? Guys, got it? Any problem?
No.
Any questions? Okay. The next thing is that we have for 9 marks. That is basically 9 marks. Prepare the petty cash book for the month ended 31st August. There is seven who maintains. So there's a person named Seven who maintains a petty cash book with a float of 150. So final balance will always be 150. That she must have 150 minimum always in the petty cash book. Getting it?
Yeah.
At the start of each month, she will always have $150 in the cash book. Okay, getting that clear?
Yeah.
A petty cash book with a float of $150. So she will always have $150 in the cash book at the start of each month. That is what is meant by seven maintains a petty cash book. Okay. So here we go. we have couple of transactions where for 9 marks we have to balance the petty cash book and bring down the balance as well on 1st September 2022, and we have to do it for a 1 month. Okay, we have to do it for 1 month. Understood? Got that clear? Any problem? Any
Yeah.
question?
No.
Okay, so here we go. It will be okay. We can say that we have August 5th, 12th, 16th, 19th, 24. So paid employee. So let's do it here, okay, by putting in the dates and these things. Okay, getting it, guys. So first thing will be starting off with balance brought down always, right? So it will be balance brought down on August 1st. Okay, so it will be 1st August. Getting it, guys. Balance brought down 1st August. How much is
Yeah.
this? 150. Okay, $150 must be there a float. Okay, $150 float. Okay, getting it clear on that? So out of $150, they have paid employees travel expenses on 5th August. So
Yeah.
voucher that you can put it voucher number 1201. So it will be voucher number 1201, and it is basically on 5th August that is paid. So August 5th, okay,
Okay.
per paid employees travel expenses. So the travel expenses, employees travel expenses are paid. Okay. So employees travel expenses are paid. How much are they? $14. So dollar will be $14 being posted here. Okay. And total is also $14. Okay. Got that understood? Clear on that?
What do
The
they mean
next,
by receipts?
can you repeat? Then we have the 12th. Go on, I'm listening.
What do they mean by receipts?
Receipts basically that you have $150 float in your cash book. $150 you have as the balance brought down. Receipts basically the money receiving. Okay, so $150 already there. Okay, getting it in the petty cash book. In the petty cash book, sir, $150 is already there. Getting it clear? Falling.
So what's the opposite of receipt?
Can you repeat? Sorry.
What's the opposite of receipt?
Payments. These are the payments, not total travel, postage, postage. You are making the payments for these. Okay. Opposite of receipts will be payments. Okay. Understood.
Isn't
So
that
where
a
you then
document?
can you repeat? Sorry.
Is it a document?
No, payments are not in the form of document. It's just you have made the payment. So you have, we can say that the payments are coming. They are called source documents. If you know about those, there are source documents from which the information comes in. Okay. So there are definitely receipts as a source document. Okay. Receipt is basically yes, you can say receipt is a source document. So yeah, we can say that. Getting
Oh,
it? Understanding?
yeah.
Clear with me? Following? Questions? Any problem? So it will
The
be, so
components
there are
and
a lot of more. That is bank statement is also a bank statement, and there are others as well. Credit note, debit note, receipts.
oh,
Okay, statement of account. Okay, if you know about statement of account, statement of account comes
yeah,
at the end of each month. Okay, so these are all source documents. Okay, so we have 1202 August 12 voucher. Okay, which is of postage stamps. Any other question? Let me know.
no,
Yep, clear on that question, right? Postage
yeah,
stamps we got. That is basically how much is it? $26.8. Okay, so it's $26.8 and it will be $26.8. That is there. Okay, then $30 paid Fabrizi, a credit supplier. So payments is made $30 for a credit supplier. That is voucher number 1203. And Fabrizi is being paid as well. Getting it clear? Falling?
yeah,
So it will be August 16th. Okay, understanding? Fabrizi
yeah,
and a credit supplier, $30 is being paid. Okay, got this sure. Then
yeah,
paid parcel post. Okay, so parcel post is being paid. Are you getting it? Falling clear on that? So we have
yeah,
a parcel post being paid on that is basically August number 19th. Okay, understanding? So that is
yeah,
basically August number 19th. Parcel post. Okay, and taxi fare. So $45 is the parcel post, which will come in travel. Okay, getting it? It will must be
yeah,
coming in the parcel post. No, parcel post will come in postage. Okay, parcel post would be coming in postage. Okay, this is voucher number 1204 definitely. So parcel post will come in postage, and then the taxi fare will come in the travel. Okay, the taxi fare must be coming in the travel. Okay, understanding? Clear on that?
yeah,
So that is 1205 voucher. And this is at August number 24. Okay, so August 24, which is basically paid the taxi fare. So here we go. The taxi fare was paid at 1205, $9.6, $9.6. Understood? Got it? So now what you have to do is just the balancing. Once you are done with this, you can see that you have to restore the petty cash book. Okay. So let's quickly restore the petty cash book. Okay. Restore the petty cash book to be calculated. Okay. At August 31st. So we can say that it will be August 31st. We can say that first we have to do the total of it. Okay. First, let's do the total of them. Okay. Understanding. First, let's do
Yeah.
the total of these. Okay. So it will be the total of them will be, we can say that it will be 14 plus 26.8 plus 30 plus 45 plus 9.6. I'm getting that as 125.4 dollars, and this is 14 plus 9.6, so we are getting that as $23.6. Okay.
Yeah.
$30 for this, 45 plus 26.8, that is basically $71.8 for this. Okay. So that's how we got. So $125.4 is spent out of $150. Okay. So it will be getting, are you with me? Following, understanding?
Yeah.
So you can say that the balance at August 31st will be, the balance brought down at August 31st will be that we have do the payments of 150. We have made the payments of 150, right? Understanding? Following that.
Yeah.
So it will be how much we have to restore the petty cash book. We'll have to put more in that to make it 150 again. Okay, understanding? Getting it clear with
Yeah.
me? Following? So it will be
Yeah.
balance carried down, 150 coming in here because you have to make the payment, balance carried on 150 coming in here. So we have to pay that there. So it will be simple in order to restore it. Getting it, guys, with me? Following? So this will be 150 plus that amount to
Why
balance
did we
off
put
it.
one below
Can you repeat?
100?
Understanding?
Why
Go on,
did
I'm
we
listening. I'm listening.
why did we put 150 below 125.4?
You have the the petty cash book needs to be at 150. Okay. If you have done the
Yeah.
expense of 125.4, you need to
Mm.
restore it. Every month it will get restored by $150. Every month it will get restored by $150. That's why we are adding it $150. Okay. That we have put in it. Understood? Getting it?
Oh no.
Let me explain again. Okay. What's the basic
Sure.
criteria here that we need to understand? 125.4 is the expense that you have done. Okay.
Yeah.
Understanding? Okay.
Yeah.
So how much you have expense done, you have to add it here. Okay. Getting it? How much expense you have done, that you have to add it here because it will be
Mm.
paid. These amounts will be paid from what $150. Understanding? Getting it?
Yeah.
So let's say you can do it 150 minus that thing that is 125.4. So I'm getting that as 24.6. Okay.
Mm.
Okay.
Yeah.
24. So you have, just imagine that you had $150. You have made all
Mm.
these expenses which constitute of $125.4. If you
Mm.
subtract it from 150, how much is left? 24.6. But every month you show
Yeah.
in your bank, you show in your petty cash book that the balance is 150. So how much you have to add? 150 minus 24.6. You have to add 125.4 now. Getting it? So now we are
Okay.
adding in
Yeah.
the receipts 125.4. Understanding?
Yeah.
The reason we are
Okay.
adding 125.4 so that we can balance of them. Okay, we are trying to balance the receipts and the payment side. Understood?
Okay. Yeah.
So now 150. So these two added up will give us something exactly to these two things added up. So this will finish off balance of. Understanding? Clear with me?
Okay.
That is basically coming to 75.4, and this will also come to 75.4. So now you can write down that at the next month. Okay, you can write down the next month on 1st September 2022. Follow carefully. I will write it down. 1st
Mm.
September 2022, I will have a balance brought down again of $150. Okay, understood? Got it clear with me? Following? Yep, you got this. Sure, no problem, no issues.
Um,
Any questions,
why
any
can we
problem?
write on 31st balance PD 150?
That's it's just a part of working it out. Okay, are you getting it? It's just a part of working it out. What we need to understand the main concept. Okay, you had $150.
Mm-hmm.
It's the same concept again. Because I need to make them balance off, right? How will I show balancing? Are you getting it? It's just a
Yeah.
fancy way of showing the statement. The main concept is still the same that I told you, that every month start you must have 150 in the petty cash book float. In the petty cash book, 150 you should have every month. So you have done the expense for this month as 125.4. We are going to
Mm-hmm.
subtract it that from 150, and you got it as 26.4, right? You got that as
Yeah.
something 26 point something. So it means basically you have to add more money in it. How much more money you have to add? You have to add 125.4 more in it to make it back to 150. Getting it clear with me?
Yeah.
So that is how the next month opening balance is still 150 because you added 125.4 in it. Okay. Understood?
Oh no, I'm talking about the previous 150 on 31st.
Yeah, this is just for the balancing purpose. You're saying about this one, na? For
Yeah.
the balancing purpose, I've done it to make both of them 275.4 balance.
Uh-oh.
Sorry, this is
This is
balance
what
carried down. This is not
again?
balance brought down, this is balance carried down.
Okay.
This will be balance coming carried down, so this will become balance brought down. Are you getting it?
Yeah.
Just like the T account, that's how it works, T account, right? Understood?
Yeah.
Now clear?
Yeah.
Any questions? Let me know any problem.
No.
Sure about it? No questions, right? No problems? No issues?
Uh, no.
Got it. Next we have to state, next we have is to state whether the impressed amount restored would be shown on the debit side or the credit side of the main cash book. So where will be the, will it be the impressed amount that is restored will be stored on the debit side or the credit side of the cash book? So it will be shown on the credit side. Getting it clear with me, following?
Yeah.
And state where in the statement of financial position, state where in the statement of financial position the petty cash book balance would appear will be shown. So where will this section be shown? This statement of financial position in the petty cash book will be shown on the current asset section. Getting it right? Because it's an
Yeah.
asset, right? Petty cash book. So current assets, it will be shown in there. Okay, understood? Got that? Clear with me?
Yeah.
Following?
Yeah.
Next we have is basically we have to state two reasons. We have to state two reasons why the balance in the petty cash book may be different to the amount in the petty cash book. The balance in the petty cash book may be different to the amount in the petty cash book. We've talked about it. Okay, why discuss state two reasons why the amount in the must the amount in the petty cash book in the petty cash box. Okay, they are saying that the balance in the petty cash book may be different from the petty cash box. Okay, why the balance in the petty cash book is different from the petty cash book. So we have to talk about that. Okay, so one of the
Okay.
reasons can be, okay, there might be an error, right? There might be the errors. There might be a possibility of errors. Okay, there might
Okay.
be there is a possibility of error as well. Okay, so this can we can say that there is a possibility of error. Okay,
Hmm.
just give me 1 minute. Okay.
Sure.
Yep, can you hear me? So there is a possibility that there might be have been an error, okay? There is a
Oh,
possibility that of the error, right? Okay, there must be must be because of an error, okay, getting it,
mm,
or it is possibility of error as well, or it might be okay, some of the cache might have been stolen, okay, you can write down that some of the cache might have been stolen. That's why there is a difference, okay, some of the cache might have been stolen. Understood?
mm, yeah.
You can give this reason as well. Anything else? Think about it. Some of the cash might have been stolen, or we can say that there might be a missing voucher. Okay, there might be a missing voucher.
Mm,
Okay, there might be a missing voucher. Just hold on.
yeah.
Okay, got this clear? There's a possibility.
Yes, sir.
Any questions in this? Any problem in the theory? Sure. Got about
No.
petty cash book? Any concerns still? If you are struggling with
No.
this, we can talk about it. Let me know. Got this right? Sure.
Yeah.
So moving forward, then next we have the depreciation question. Okay, question number 17. This is the second last question. So of this paper, so we have a depreciation question now, right? Understanding.
Yeah.
So let's talk about how this depreciation question can be solved. Okay. So we talks about depreciation now, and in the January 2023 Edexcel 4AC1 accounting paper. So let's quickly read the question. I'll give you a couple of seconds to read it. We have to make the disposal account and the computer equipment account. Okay.
Okay.
Okay. So what will happen is basically that there is Carson depreciates his computer equipment using the straight line method at 20% per annum. So the method of depreciation is 20% using straight line method. A full year depreciation is charged in the year of purchase, but none
Mm,
in the year of disposal. On 1st September 2021, the opening balances were given. So what we have to do, we have to prepare the following accounts for the year ended 31st August 20. So this is, we need to understand the first thing is when is our year starting, sir? Our year is starting on 1st September 2021, which means it will finish on 31st August 2022. Okay, understood? Our year, if
yeah.
it's starting on September 2021, it will finish on August 2022. Okay, understood that? Clear with me?
Yeah.
Following? No problem, right?
No.
So that is important to understand. The next thing will be that you have to make the depreciation provision for depreciation account. So always provision for depreciation account for the computer equipment starts on the credit side because of the nature of its contra. So it will be sir balance brought down, which will be 9,200, which on the date
Mm,
of 2021 September 1st. Okay, let me know. Got it? Okay.
yes, sir.
Then you have to calculate the depreciation. The policy is simple. It is straight line method. It is
Mm,
straight line method at 20% per annum. and in which in the year of disposal, no deduction is charged on that. So we have computer equipment of 16,800,
mm,
and computer equipment originally purchased is also being sold off. So what we can say is basically the cost is 3,600. So if you have to find the depreciation, it's very simple. Let's try to do the working here only, getting it?
yeah,
Or let's try to do the working here, okay with me, following? So working number
yeah,
one, if you are going to find out the depreciation, that is what is going to come in the income statement figure. So it's very simple, sir, that it will be working number one, that will be
mm,
subtracting this thing and applying 20%. Okay, so we have to apply straight line method, means sir cost. So it will be 16,800 minus the cost of the asset, that is 3,600, getting it? And then whatever
yeah,
you get, apply 20% on that. Okay, understood?
yeah,
So I am getting that as basically correct. So it's coming 13,200 into 20%, sir. So it's coming basically, the next thing is coming, that is 2,640 is the depreciation for the year. Okay, understood that, clear? So, sir, it
yeah,
will be 2,640. Just have to find the disposal depreciation and you will get the closing value then. Okay. Understanding? Clear with me?
yeah,
So how can you find the closing disposal depreciation? By using the disposal account. Okay, so let's wait. Now let's make the disposal account. What is the format of disposal account? Very simple, sir. The cost of the asset will come here. How much you have sold it for will come here. That is 1,950. Okay, understanding? So that is how much you have sold it for, the bank value, 1,950. Understanding? Getting it clear with me? And this is the
yeah,
cost of the asset, that is computer equipment value, cost of the asset coming here. Understood?
yeah,
Okay. And this is done at the this is done at the end of the year, right? So this is done on 1st May 2022. This is done on the 1st May of 2022. 1st May of 2022. Computer equipment that was purchased got sold out. Okay, understood? It got sold out. You have disposed it. So it will be
mm,
that 2022 1st May we are dealing this. We are doing this transaction. 2022 May 1st we are doing this transaction. Okay, understood? Got it? Clear with me?
yeah,
Following? So let's find out the disposal depreciation, how many years we have used it. Working number two, let's do it here only. So if we have purchased it, they are telling us when we have purchased, sir, we have purchased on 1st March 2020, which means if we go back to couple of years, we need to understand that. Let's call this, it will be 1st
mm,
September 2019. If the year started on 31st August 2020, so first year would have been in this one, right? The first year, because it is purchased on 1st March. So you can say that this would have been our first year, okay? 2019 to 2020 would have been our first year, right? Understanding? Getting it?
yeah,
And then from 2020 to 2021 we have used it as well, and 2021 to 2022 we are disposing it now. Okay, so in this year we are disposing, so 2 years depreciation we have to charge. Understanding? So we have to
yeah,
charge how much depreciation? We have to charge, sir, for 2 years depreciation. So it will be 3,600 the cost of the asset into 20% and for 2 times. Okay, understood? Because it's the
yeah,
straight line method. Okay, so 3,600, 20% into 2 times, 1,440 is the provision for depreciation. Okay, and it will be the
okay, yeah,
same disposal depreciation as well. That is how you
mm,
are going to do it. That is provision for depreciation. Okay, understood now, clear?
yeah,
So take out whether you are making a profit or loss in this. Let's see. So we are making a loss on this. Okay, understanding. So we are making a loss on this of $210. That is loss on disposal of $210. Let me know. Got that clear? Following.
yeah,
So here we go with this. It finishes off. This account will balance itself off because it's a temporary account. Okay, understanding. So it will be 3,600 and
yeah,
3,600. Okay, and then this one is basically, we can say that balance carried down was basically how much. We can find it out by saying that now the end of the year have come, that is 2022 August 31st, 2022 August 2022. This This is done on May 1st, and this was done
Yeah.
on August 31st. Okay, understood? With me getting it
Yeah.
clear? So you can just
Yeah.
work out the values and that will be good enough, okay?
Okay.
So it will be 9200 plus 2640, 9200 plus 2640. I'm getting that as 11,840 and 11,840 and minus 1440. So I'm getting that as 10,400. Make sure you have to balance the account as well. So
Why don't we
10,400,
do cost minus provision and then find the
because
difference?
it's that is done in the reducing balance method. There's only straight line method. Everything applies on the cost thing. Okay. Understanding?
Okay.
So the
Yeah.
next year starting will be our opening balance, this thing. That's how we get 9 marks on depreciation. Make sure to revise it and any questions can be asked. Okay. Always remember,
Okay.
sir, straight line method is always on the cost into the percentage. That's what we have done. That is why it's not a bit difficult, not a bit tricky. Just remember that you need to understand that your year is starting in 2021. Our year starts in 2021 and ends on 2022, which means if you have purchased the asset on 2020, it means the year started on 2019 to 2020. Then the second year was 2020-21, and the last year we are disposing it, so we don't charge option in that year. Okay. In the year of disposal, we don't charge. In the year of purchase, we charge depreciation. Okay, understood?
Yeah.
And then it's on its based on its use. Okay, got this clear? Falling right, sure,
Yeah.
no problem. Okay. Then we have to define the following terms, give an example of each, and state two reasons. So we have a 6 marks question here. So let's quickly do this. Define the following terms while giving example of each. We have talked about this in previous questions as well. We have to do capital expenditure and revenue expenditure. Okay. So let's talk about the capital expenditure, sir. What is the definition of capital expenditure? You can just simply give that expenditure that is done on non-current assets. Okay, expenditure done on non-current assets or for improving the performance, expenditure on non-current assets or expenditure that is for more than 1 year on non-current assets, but usually usually for long term. Okay, usually for more than an year. Okay, so you can just write down as much as possible in this box. Okay, an example
Oh,
will be building an extension, building a motor, or you can just write down that motor vehicles or building an extension, building a uh, building an extension, motor vehicles, cars, plant equipment, on those things. Okay. And what is revenue
yeah.
expenditure? Like rent, wages, salaries. Okay. You can write these
Yeah.
things: rent, wages, or you can write down maintenance as well: rent, wages, maintenance. These are the examples for revenue expenditure. What is the definition of revenue expenditure? On the expenditure on day-to-day basis or expenditure,
Oh,
recurring expenditure. Okay.
yeah.
Recurring recurring expenditure, recurring expenditure on day-to-day basis. Okay, understood? Getting it clear with me following?
Yeah.
See, got this, sure about it, no questions, right? No problems.
Yeah.
And then you have to suggest two ways. We have to suggest two ways in which Carson could maintain the security of his computerized data. So how can Carson suggest the two ways that Carson could maintain the security of his computerized data? So how can he do it? Security. How can he maintain the security of his computerized data is basically definitely,
Passwords.
yeah, the best thing is to use passwords, okay? Strong passwords to make strong passwords he can use. So he can use passwords to secure his data. What else he can use? He can use softwares to
Oh,
detect the fraud, okay? Softwares to detect
yeah.
problems, okay? So he can use the antivirus softwares. You can write down
Yeah.
antivirus softwares he can use, as well as he can use the there's different types of softwares he can use. Okay, understanding, clear with me, following?
Yeah.
Sure, got this, no problem, right? No issues.
No.
Okay. Then we came into last question. So let's try to do finish off this paper as well. Question number 18 talks about bank reconciliation statement. Okay. Any questions in
Yeah.
depreciation? So we have done up till now, sir. Trial balance, question number 16. Question number 15 was trial balance, 16 was petty cash book, 17 is basically depreciation. And now we have 18 that talks about the bank reconciliation as well. Okay, guys, getting it clear with me following?
Yeah.
Okay, so we have some bank reconciliation statement as well. Okay, understood? Got it, guys? Clear? Following?
Yeah.
That is very important. Okay, so we have this, and on 30th September 2022, the bank column of Sam's cash book showed a balance of 2,640 debit, which did not agree with the bank statement balance of 4,079 credit on the same date. Okay, so what it's the common thing, common nature, common simple thing that the bank statement balance doesn't match with the bank statement column. The bank statement column doesn't match with the cash book column. Okay, so the cash book is not matching with the bank statement values. Okay, he discovered the following: calculate the updated cash book. We have to find the updated cash bank balance at 30th September. We have to do that. Okay, calculate the updated bank balance in Sam's cash book. So we just need to update the bank balance, cash book balance, okay, by whatever is missing out because the bank statement is not matching the cash book, okay. So you
Yeah.
can see that a direct debit was done. A direct debit of $148 had been entered in the cash book
Mm.
as 184, and bank charges 182 had not been entered in the cash book. Okay. Similarly, a check received $260 and checks issuing had been entered in the cash book, but not. So what first is all about? First, all about is the cash book balance. Okay. So here we go. The cash book
Yeah.
balance was 2,640 debit. Okay. That is the cash book balance, right?
Yeah.
2,640 debit is the cash book balance. Okay. And
Mm.
understanding 2,640 is the cash book balance. You can write it down: balance, cash book, balance of cash book at 31st, at 30th September 2022, cash balance at cash book 30th September 2022. Okay, that is
Mm.
2,640 debit. Subtract the bank charges. Always remember bank charges are to be subtracted. So bank charges will be subtracted, and bank charges will be subtracted. Getting it, bank charge of 182 will be subtracted. Are you following with me? Getting it clear? Any questions? Any
Yeah.
problems? Okay.
No.
And what we can say, 2,640, 30th September 184, a direct debit 148 has been entered. Okay, so there are two mistakes. Okay, one of the thing is this simple mistake. Okay, getting it. One of the thing is that bank charges of 182 had not been entered in the cash book. And what about the other thing? So bank charges were not written. Understanding?
Yeah.
Sir, the bank charges were not written. And the other thing, the mistake in cash book was, so you have to subtract the bank charges, sir. And the next thing is that the direct debit, follow in the other highlighter, that the direct debit, so payment, direct debit is basically a payment, okay? So the
Mm.
direct debit payment, the direct debit of $148, it has been entered in the cash book as $184. So it has been entered as more, okay? Understanding?
Yeah.
So we have to make a payment of 148, but we have recorded it as the payment of 184, which means we'll have
Mm.
to find the difference between them. That is basically, sir, 184 minus 148. That is coming almost how much? $36. Okay. So this
Yeah.
$36 has been entered extra in the cash book. So we are going to add
Yeah.
it. कि extra payment deduct हो गई है. Because of the
Mm.
extra payment was deducted, so we are going to add it back. Add back the 182 minus bank charges and add back the direct debit error. You can write down that the direct debit error of $36. Okay,
Why are we
understood?
adding it?
We are I'll explain. Direct debit is an expense. Okay, direct debit is an expense. So basically Sam have to pay $148, but by mistake
Mm.
he paid $184. Getting it? So that's why we are
Okay.
adding it back, that he needs to recover the amount, that extra payment he needs to recover. Understanding?
Okay. So direct
Following
debit
that?
is when I'm paying.
Exactly. It's a payment, okay? Direct debit is a payment expense, okay?
Okay.
And I have a complete video on that, what is basically meant by direct debit and standing order. I'll share that as well. Okay, so here we go.
Sure.
Now we have updated cash book balance we have. So updated cash book balance will be, sir, 2,640 plus
Hmm.
36 minus 182. We got that as 2,494. Okay, understood? Got it, guys?
Yeah.
Clear with me? Following? Understood. So 2,494 is that amount. Okay, sure, got it?
Yeah.
Clear?
Yeah.
Understood, got this? Clear on that? Sure.
Yeah.
Direct debit error was there. So because we needed, Sam is the person here. Sam should have make a payment of $148 from the cash book, but he made 184. So that's why we have to add back $36 because he have paid extra. Then it's all about the bank reconciliation statements. We are going to start with the updated cash book balance, sir. So we have to start with the updated cash book balance, okay? So this balance will
Okay.
continue here because we have to look here it is. You have to state the two features of a direct debit. So I'm going to explain anywhere here what is a direct debit. Okay, understanding?
Okay.
It's part of theory. Okay, so updated bank
Okay.
balance 2,494 we have of cash from the cash book, and then it is a check received or 260. It had not been processed by the bank, so 260 it's basically the outstanding lodgements. Okay, so 260 will be subtracted. Okay, getting it clear with me? Following? So 260 will be subtracted because this is a check received, but it had not been presented to the bank. Okay, it is
Yeah.
a check. We have received the check, but it had not yet been processed but had not been processed by the bank. So this is basically a check received. So we have to subtract that. So it's called outstanding lodgements. Okay, or also called uncredited checks. Okay, you can call them uncredited checks. These are called uncredited checks that are received but not yet presented, or you can say outstanding lodgements as well. Okay, understanding?
Yeah.
And then the other one, the checks that are issuing total of $1,485, they had been entered in the cash book. So the checks were issued. The Sam made the checks to the people, but the bank have not processed yet. So that is why it will be payments being added up. Okay, that is the amount of 1,845 being added up. Okay,
Okay. Yeah.
and eventually you will get that
Why
balance.
do you
Okay,
subtract 260?
I'll explain again. No problem. Just give me 1 minute.
Yeah, sure.
It's a format as well. I'll give the format as well. You can learn about the format as well. These are called unpresented checks that we are adding. Okay, understanding?
Yeah.
And this will be the updated balance. This will be updated balance of the bank reconciliation statement at 30th September 2022. Just tally if it's coming correct or not. 2,494 plus 1,845 minus 260. So I am getting that as 4,079. So make sure
Okay.
in this question you can check your answer as well. Okay, understanding?
Yeah.
So this is coming matching. Okay, understanding?
Why did
4,079.
we minus 260?
That I'm explaining. What I'm trying to tell you is that you can check your answer, tally back your answer with the bank statement answer at the start. It is matching now. Now the error has been corrected. Okay, understanding? Okay, getting it?
Yeah.
4,079 we are getting the bank balance BRS. Okay, so now let's go to the explanation of how we are getting that. So what we need to understand is basically this is the check received. Okay, understanding? This is a check received to Sam. So Sam is receiving the payment, okay? But Sam is receiving the payment. Cash book is being made by Sam, okay? But for the bank,
Yeah.
bank have not yet processed it. So it is not showing in the bank statement. That is why it will be subtracted. It's an uncredited check. because we are starting from the where, because although it should have been added, right? It should have been added in the bank reconciliation perspective. Okay. Are you guys getting it?
Yeah.
If you are starting from the balance of bank reconciliation statement, you would have added the uncredited check. But because the examiner wants you to start from the cash book perspective, it will have to be subtracted. Okay. Because already
Mm.
the amount is received in the cash book. Okay. Understanding?
Okay.
And this is the opposite. These are the payments that Sam have to make. Okay. These are the payments that Sam have to make. So these payments should have been deducted from the bank reconciliation statements. But because we
Mm.
are making in the opposite direction, we are starting from the cash book. So cash book will need to add them in order to reach the closing balance of the BRS, bank reconciliation statement. Just need to understand that it's a bit different format. If you start from BRS, these things will make sense. Okay. In that we have to add unpresented checks and less uncredited checks. Okay. Getting that clear?
Okay.
Sure about it?
Yeah.
Okay. We'll discuss more in detail. Okay. So state two features of a direct debit. So what is basically a direct is basically direct debit is done when the payment is fixed. Okay. Are you getting it? When the payment is fixed, so it is used for a recurring payments. Okay. Like every month someone have to pay the expense, right? So it is used for the recurring payments. That is, if every month you have to pay for any expense, you can use direct debit. Okay. Used for recurring payments. Okay. Understood? First thing is, for example, you have to pay the wages or you have to pay the salaries to someone. You have to pay rent on every fifth of every. Okay, you have to pay on every fifth. You have to pay on every fifth of each month. So that is what will happen. Okay, getting it clear?
Yeah.
You can use direct debit for that. Then it is the possible that it is made at the request of the payee, and amount and dates can be variable as well. Okay, so the amount and date is not fixed as well. Okay, the amount and date can vary. Okay, in this amount and date can vary as well. So you can make the payment at any time and the amount can change as well. It's not a fixed amount. This is, you don't have to do a fixed amount here. You can change, you can vary it. Amount and date can vary. If you are paying on some month fifth of the, you can the next month you can pay on 10th as well. Then you can pay on 12th, you can pay on 20th as well, depending on what's happening. And you can learn also that it is made at the request of the payee. Okay,
Okay.
this is made at the request of the payee. So whoever is paying it, it is made at the request of the payee. Okay, so that person will request it for the direct debit. Okay, understood?
Okay. Yeah.
With this, we are left with a 5-mark question. So let's try to finish this as well. Sam currently maintains only a cash book to record his business transactions. He has decided he should maintain a full set of accounting records in the future. Evaluate two benefits of Sam of maintaining a full set of accounting records. So we have to evaluate two benefits of maintaining a full set of accounting records. So we already know what are the benefits of maintaining a full set of accounting records, right? So let me know what are the benefits. He only maintains a cash book at the moment. We need to write down
Mm.
benefits of maintaining full set of accounting records in the future. Let me know any ideas. You got it, everything clear on this, right? No questions, right?
No.
So maintaining the full set of accounting records help in to reduce errors. Okay. Maintaining full set of accounting records will help in reducing errors. Maintaining full set of accounting records, maintaining full set of accounting records will help. Maintaining full set of accounting records will help in monitoring and control, will help in monitor and control over business, will help in monitor and control over the departments. Okay, getting it clear
Okay.
with
Yeah.
me? Help in monitor and control of the business, will help in
Mm.
monitor and control of the business. Less chances of errors, less chances of errors. Okay, so there will be less chances of errors as well. Understanding? There will be
Yeah.
less chances of errors as well. Less chances of errors, and detect fraud easily, and detect fraud, and you can detect the fraud as well easily. So you can write these points. Okay, understanding with me,
Okay.
following? And what
Yeah.
else points we can write? Let's talk about more. That it will also full set of account, it will help Sam to have more information. It will help Sam to have accurate information, to have accurate and up-to-date information is available for him. Okay, accurate
Okay.
and up-to-date information is available for him. Getting it?
Yeah.
Up-to-date information is available. Up-to-date information is available to him, with which he can. Okay, up-to-date information is available.
Mm.
Information is available, which will help in better decision making, which will help
Oh,
in bit. So this is 1 point in blue mark, that will give us 2 marks, and one in the black color will give us 2 marks. It will help Sam to have accurate, up-to-date information, uh, which will which will help in better decision making. Okay, which will
yeah.
help in better decision making. Understood that, Claire? Following.
Yeah.
So you can write these benefits of full set of accounting records, and that is it. And make sure 1 mark for the final answer. That therefore he should definitely, this action will definitely benefit, and he should maintain it. Okay, therefore Sam should maintain. Therefore, Sam should maintain 1 mark for the benefit evaluate. Therefore, Sam should maintain it. Therefore, Sam should maintain full set of accounting records. Understood? Therefore, Sam should maintain full set of accounting records. Therefore, Sam should maintain full set of accounting records.
Okay.
Therefore, Sam should maintain full set of accounting records because it will benefit his business. Okay.
Okay.
With this, it is finished this paper, and we have talked about trial balance today, bank reconciliation, depreciation, petty cash book. So we have discussed these type of questions. 4 questions that this paper completes. I'll share this paper with you. Make sure if you have any questions, do revise. Any questions can be asked with me in the comment section or anywhere. So yeah, thank you. Take care. Love. Bye. Got it? Any
Yes.
questions? Okay.